Imagine looking at your investments and knowing that no matter the market fluctuations, you're prepared for every cycle, every risk. We're not talking about secrets or quick tricks here. We're talking about a mindset, a way of thinking that keeps the best investors one step ahead, especially during times of uncertainty. Now, picture Howard Marks. He doesn't just understand the markets. He's lived through 5 decades of cycles, bubbles, crashes, and rebounds, and thrived in each one. If you want to understand what he's learned throughout this journey, you're in the right place. Today, we'll dive into the strategies billionaires use to protect and grow their fortunes. Strategies that not only ensure consistent returns but offer security during the toughest times. Stay tuned and discover how you can apply these same lessons to transform your investment approach and protect your wealth, just like a true long-term strategist. Let's get started. The first thing that separates an average investor from an extraordinary one is the way they think. Howard Marks often talks about what he calls second-level thinking. This means going beyond the surface, seeing what most people aren't noticing. It's not just about knowing which company or stock is hot right now. It's about understanding what the market hasn't yet realized. It's having that insight that others miss, and that's a skill that takes years to develop. When I started, I realized that just following the market wouldn't get me anywhere. It felt like running in circles. So, you need to ask different, deeper questions. While everyone's asking, what's going to rise? The best investors are asking, why does everyone think this will rise? And what could go wrong? That's the level of analysis that separates the best from the rest. Howard Marks emphasizes that in the world of investing, the advantage comes from thinking differently, not from being faster, but from being more strategic. It's an approach that focuses on understanding real value, rather than just reacting to market value. And once you adopt this mindset, you start to see opportunities where others only see risks. We'll dive deeper into this point in the next lessons. Most people view risk as a monster to be avoided at all costs. But successful investors know that risk is inevitable and can be your greatest ally if you learn to master it. For Howard Marks, understanding risk is more important than trying to eliminate it. And that's something he does better than almost anyone else. Think of risk as the price you pay for opportunities. It's not the enemy. It's a tool that, when understood and used properly, can lead to extraordinary returns. An experienced investor isn't just obsessed with returns. They focus on understanding where the traps are hidden, where they could lose. Marx always says you should focus on avoiding the downside before chasing the upside, and I couldn't agree more. I learned early on that protecting what you've already built is just as important as seeking new gains. That's the key differentiator for those who thrive during crises and instability. They know where they're stepping, understanding every move they make. Marx says that, instead of rushing into the next big investment, a good investor asks, what's the worst-case scenario here? Can I handle that? And if the answer is no, they walk away. This caution is the key to surviving in any market. One of Howard Marks' greatest lessons is the inevitability of market cycles. He believes that, just like day and night, markets have their own highs and lows, their periods of euphoria and depression. The difference between an experienced investor and a beginner is the ability to predict and prepare for these cycles, rather than reacting impulsively to every fluctuation. The market is not a game of chance. Each phase, each move, follows a repeating pattern over time. When everyone is optimistic and buying, that's when the most careful investors start to slow down, preparing for the inevitable decline. And when panic sets in, that's when the most strategic investors find the best opportunities. Marx teaches that resisting the impulse to follow the crowd's optimism and fear at the other end is crucial. I learned this the hard way. During times of euphoria, it felt like everyone was winning, and it was easy to be lured by the desire to be part of that. But over the years, you realize that those who truly thrive are the ones who stay focused, who don't get caught up in the heat of the moment. Howard always advises, prepare for market cycles. Don't fight them because they're inevitable. Once you understand this, you start seeing the market in a new light. You realize you don't have to chase the next boom, you just have to prepare for the next cycle. And then, while many panic during the downturn, you're positioned to reap the rewards. In the world of investing, investor psychology is almost as important as the numbers themselves. Howard Marks frequently emphasizes how the mind can be an investor's greatest enemy or greatest ally. He believes that, to make sound decisions, it's essential to control your emotions, especially when everyone else is acting irrationally. One of the biggest traps I see is herd behavior. Everyone wants to follow what seems to be working. But it's exactly at these moments that the worst decisions are made. Marx always warns that if everyone is thinking the same way, you should probably question yourself. In the markets, what sets you apart is not following the crowd but maintaining your calm and acting contrary when necessary. I've learned myself that, in times of crisis, it's tempting to act impulsively. It's as if fear and panic are contagious. But Marx teaches that, in times of uncertainty, the strongest investors don't get swept up in the collective hysteria. They keep a cool, calculated perspective, focusing on the fundamentals rather than headlines and rumors. Being a successful investor requires a special kind of patience and resilience. Marx reminds us that you have to know how to wait. The market will eventually return to equilibrium. And that calm, that ability to act based on your own analysis rather than what everyone else is saying, is what separates the investors who thrive from those who just survive. For Howard Marks, diversification isn't just about reducing risks, it's about increasing your chances of success by understanding how different assets work together. Many people think that simply spreading their investments across different options is enough. But for successful investors, diversification is a strategy carefully thought out with intelligence, considering not just the quantity but the quality of each choice. When I started, I also thought that spreading my capital was enough to protect me. But true diversification requires more than that. Marx explains that it's essential to understand how each investment contributes to the portfolio as a whole. The idea is to balance assets that, together, offer greater protection and improve the chances of returns, even during times of crisis. Howard shows us that a well-diversified portfolio is one that protects your capital while allowing for growth. Instead of thinking about more options, he teaches us to think about which options, where each asset complements the other. This balance allows you to sleep soundly at night, knowing that no matter what happens in the market, you're prepared. One of the greatest lessons I learned from Howard Marks is the importance of making decisions based on solid principles, not impulsive reactions. He often speaks about the need for continuous education and staying true to a grounded approach. I've fallen into traps by trying to follow trends or acting under pressure. But those who win in the long run are the ones who maintain a disciplined mindset and focus on what truly matters. Marx teaches us that a good investor must be resilient, not swayed by short-term fluctuations or the fear of the unknown. This means knowing when to act and when to wait, and most importantly, making decisions with a clear vision for the future, based on data and analysis, not emotion. To make resilient decisions, you must have a clear strategy and always remember that the market, no matter how volatile, is cyclical. What sets a successful investor apart is the ability to make informed decisions even under pressure. With this, you begin to realize that it's not just about getting it right in the moment, but about following a path of choices that align with your long-term vision. And that's one of the secrets Howard Marks shares. Never rush, always educate yourself, and above all, always be resilient. One of the greatest truths about investing is that, in the long run, patience is a rare but indispensable virtue. Howard Marks always emphasizes that true success comes to those who know how to wait. In the markets, short-term fluctuations are a constant, but they are temporary. What matters is the big picture, the long-term view. I remember when I first understood that to create real wealth, I needed to slow down. Trying to win fast doesn't work. As Marx always says, people who try to predict the near future are doomed to fail. And it's true. I've made risky bets during euphoric times, thinking I could make money quickly, but soon realized that when the market changes direction, those who bet on the short term often end up losing. But the story is different for those who stay focused on the long term. Howard teaches us to be resilient, to trust in the strength of our investments, and to be patient. The best investors are those who can ignore the distractions of the moment and stay focused on building something lasting. And that's how you create real, solid, and consistent wealth. Now that you've learned the essential lessons Howard Marks has shared over a lifetime of investing, I want you to think about what you've absorbed. The true strategies for success in the market aren't about following trends or acting quickly. They're about understanding the cycles, controlling your emotions, protecting your capital, and maintaining a clear, patient vision. As someone who has been through the highs and lows of the investment world, I can tell you that this disciplined, long-term approach is what separates the winners. You don't need to be a genius to invest successfully, but you do need to be willing to learn, adapt, and most importantly, be patient. If these lessons resonate with you and you're ready to apply these principles, start now. The market is full of opportunities, and true wealth comes to those who know how to navigate it with intelligence and perseverance. So, if you enjoyed this content, leave a comment, like the video, and share it with someone who needs to hear this. Success is a journey, and you've just taken the first step.